This video chart presentation of Trimel Pharmaceuticals. Trimel trades on the Toronto Stock Exchange under the ticker TRL. See, the stock suffered quite a fall back in October, dropping from up around 75 cents all the way down to 40 cents. I didn't do any fundamental research on this. I don't know what caused this drop. I don't know if it had something to do with the stock offering or if it was some bad drug news. But what I do know is that from a technical standpoint, it held a strong support at 40 cents. And in the last week or so, starting to creep back upward, breaking back above an initial resistance point set up around 45 cents, and now pushing above another resistance point at 50 cents, with the green close on Wednesday at 52 cents on about 195,000 shares traded. With the move the last couple days, the stock has moved back above the 20-day moving average, this purple line, and because volume has increased modestly, especially compared to where it was trading previously before the fall, I want to keep an eye on this for continued upward pressure and see if it has another jump in it heading into the weekend. I got a bullish cross of the MACD about 2 weeks ago, as we see that MACD slightly moving back towards zero, giving us hints of a trend shift happening. Now, of course, we want to see it break through zero to show a much stronger trend and to shift into bullishness. But for a bottom play, that move in the MACD back towards zero is exactly what we're looking for. Can also see the slow stow climbing upward, showing that momentum is building in the play. Importantly, it's back over top of 50 now. Even on any retraces, we want to see it hold that 50 mark to show that there's still bullish momentum in the play, and that any retrace is indeed just that as we look for continued upward pressure. Along similar lines, the money flow index has been steadily climbing over the last couple weeks, and it too is pushed to the upper half of the indicator, signaling that people are paying higher prices for the stock, and the chart's entered into a bit of a bullish position. The relative strength index has been coming out of oversold ever since this plunge a month ago, steadily rising, and now at that key point, registering a 48 after Wednesday's trading, where we want to see it push back through 50 to show that the bulls have taken control of momentum, because it's pretty clear that that's been a very difficult point for the RSI to move through. So I want to pay attention to that now, see if it can finally break above and hold above 50 to show stronger momentum in the chart. Now I'll note this bottom support at 40 cents, which is key for any deep retrace if it happens. And you can also see another support level right in here through about 45 cents. That would actually be a place I'd have my eyes set if it tries to pull back to there, because if it pulls back and tries to break through 45, especially on an increase in volume, the odds are really increased. It might blow through this bottom support at 40 cents as well and go ahead and make a lower low. So I'd be pretty attentive to that 45 cent mark first and foremost to hold above the 20-day moving average and keep that old area of resistance as a new support point. I don't want to clutter this up too much and put in this mark at 50 cents. That's also a new support level, but realistically, I think this one just below it's a little bit stronger anyways, so that's the point we'll be looking for. To the resistance side of things, there's just not much in the way now, other than a point right there where the stock initially gapped down, and that happens to tie in with this 50-day moving average right there around 65 cents. Now it's still a nice upside of almost 30% from Wednesday's closing price. And as we always look for, this is one of those stocks with a close support level and an upside to resistance that far outweighs the decline back to support. That could be used as a stop loss area. Beyond that 65 cents, I'm just looking for the gap to be filled, which is all the way up around 75 cents. And I'm sure that just based upon these previous few months, resistance is going to start to get pretty heavy in through that area, especially up near 80-82 cents. Of course, we'd also like to see volume pick up a little bit, but this is clearly a pretty thinly traded stock all along, so it's not the type of thing that I'm going to be looking for volume in the millions. I'd just like to see it stay steady and at least stay up around 200,000 shares or so to show that there's buying interest coming back into this play after perhaps the sellers got out on this drop. It's a pretty nice looking chart though as far as a classic bottom play. Indicators are giving hints of a reversal happening to show that upward pressure may be coming into this. It's one that we'll keep an eye on going forward to see how it performs. As always, it's merely my interpretation of the TRL chart. I'm not a financial consultant. Strongly encourage you to do your own proper due diligence. Consult with a qualified financial advisor before making any investment decisions. Past performance is not a guarantee of future results. Please visit the allpennystocks.com website to view the full disclaimer disclosure, and do not base any investment decisions on any material found on the website and/or its video chart. No person employed by All Penny Stocks is a registered investment advisor or licensed broker-dealer. Thank you for watching. Trade smart.